Hello everyone. So I'm Sanjana Uttappa from Headstart Investor Circle. At Headstart, we drive investments through this initiative called Investor Circle. And the primary objective of Investor Circle is to educate more and more individuals about angel investment and, of course, make early stage capital available to a lot of startups. So, as part of this initiative, we also host this knowledge series called Investor Saturdays. So the idea is to get more and more experts from the angel investment space or people who have been doing this for a while and to come share their stories or experiences or share some insights with the newbies to this ecosystem at large or angel investment at large. So today we have with us here Jayaroopa and Neiharika, who are the founding partners of Encubay Angel Network and who've been doing angel investment for quite a while now. So I'll probably hand it over to them to quickly introduce themselves and then maybe I'll deep dive into the session. Hi, Neiharika and Jayaroopa. Thank you all so much for joining us and taking out the time. Jayaroopa has joined us all the way from Singapore, and I understand today is a weekend. I am sure you all have your own things to do, but thank you for taking the time out on an evening, Saturday evening, and joining us. Over to you. Probably you can have a quick introduction about yourselves and we can take it from there.
Thank you so much, Sanjana. Thank you. Rupa, should I go first or would you like?
Yeah, sure. Go ahead, Neha.
Okay, thanks so much. First things first, I'd like to say thank you to Headstart and a shout out to them. I love the incredible community you guys have built, and I've had the good fortune of working with you across, whether it's Northrise or your Central India Summit, and of course, working with Banya. So it's a lovely set of people, and I'm so glad you're doing this and getting the ecosystem more charged up. A little bit about me. I come with about 14 years of experience in the corporate world. This was a past life, I would say, wherein I worked across sectors, healthcare, consulting, cybersecurity, and fintech. And then from all of that, what I realized was that, I loved understanding different sectors and working and, understanding how each thing works. And I just took that little understanding that I had and passion to angel investing because it's something to me which is very empowering because it's taking my own financial decision. It's an asset class which is growing. And that's how I began. And it began with a very small angel investment back in 2015. And I would say I've tasted blood since then. And it's now been a great way, and being part of the ecosystem, it's even better because you get to see the best of founders and such innovative and disruptive ideas. So where it's, angel investment becomes learning. You learn about each of the new startups. You get to participate in the growth story of India and of that founder. And of course, you end up making some money on the side. So that's been my story.
Lovely, Neiharika. That's awesome. Again, thanks, Sanjana. Great opportunity to meet a bunch of you. And brief introduction about myself. I have been a part of the financial services industry, fintech industry for a while in various forms. Very early on was a corporate banker, moved on to microfinance in its early days. So you could say seen, growth stories, right? From startup to growth kind of angle, and eventually headed fundraising and investor relationships for Jana Small Finance Bank, which was then Jana Lakshmi. And then headed a couple of venture capital funds, impact investing firms, where I was heading the India investments. I wouldn't say I've been very long in the angel investing ecosystem, simply because I was very exposed to the early stage ecosystem, right? Because my career was there, so it was a kind of diversification for me to not put in my personal money also there. So that was the tack that I adopted. And later, after I moved out of it, to me, it was, I've always been interested in gender as a theme, right? So whether it was microfinance or setting up my own network called the Women in Investing Network, which is focused on women VCs, right? A professional network for women VCs. So it's all, gender has always been a theme. And that's when it was, to me, it was also empowering to ensure that I'm managing my finances, not just in public equities, but also in private equities. And that was when the switch happened. It's a great ecosystem to learn, right? Whether you're a VC or an angel investor, it's a great ecosystem to learn and apply and see trends very early on, which is what is very interesting about this aspect. So it's not just about returns. I would say angel investing is much more than returns, right? If you decide to, it can be a little more than much more than returns, or you can choose to be passive and focus on the returns. So looking forward to some great engagement here.
Thank you, Jayaroopa. Thank you, Neiharika. I think that was a tremendous introduction. There was a lot to learn from that itself. So I'll probably open up. I'll pick up where you all just left about angel investment and how we all just entered into it. What was angel investment like when you first got into it? How did you first evaluate a startup or trust in your gut to put your money into this? Or did you even decide to say, okay, this is a startup I want to put my money into? What was that like and how did that go? It's a question open to the both of you, since I would like to know both your journeys.
Okay, I'll go first. So as far as my first investment was concerned, there is both. Let me talk about both my angel investing and my VC experience, right? As far as angel investing is concerned, the first one was, the usual route where, you're actively discussing it with friends. And some of my friends, had researched this company, were very enthused about the team, right? And that was when, I got excited about it as well. It was not, it was in the hospitality industry, and very interesting team, exciting team. They seem to be on to something, which is, so I dwelled much more into the team of the business than the idea itself, because I know that, it would get somewhere. And that was my first investment, still active and doing well. As far as the, I'm happy to share more on how, one should assess, how one goes about evaluating. Maybe we'll first hear Neiharika's story and then we'll get to that.
Sure thing.
Sure, that's great, Rupa. I didn't know that. So it's good. I think Rupa and I are also getting to know a little bit more about each other's angel investment stories outside of work today. So that's great. My story is slightly different. So I had my, son, and typically what happens is, right, at the time, 2014-15, everyone would say, you get some friends and family to give you money, and there's a bunch of money there, and it's typically, let's put it in an FD, right? I mean, that's at least what it was with me. And I don't know. I think for me, it's I won't say it's just been, the universe sort of working on that side. I definitely believe a lot in that. And I think that also happened with me because I was back to India and I realized I don't want to put my son's money in an FD. For me, it was the idea that, I can take the risk. I can still afford to take risk with this amount because it's 18 years out where I'm going to use it, right? So I saw that sort of horizon in terms of my investment. And there was a cool startup at the time, which was spoken about in the Economic Times. So I was back visiting and I read about these boys on the school circuit, IIT Delhi boys, 5 of them, solving a problem for women's safety. And I reached out to them over LinkedIn. So networks help, random cold call. And I just decided to meet them and I met them. And just like Rupa, loved the team because very early on, it's the team. And I didn't even think about it, that the term angel investment wasn't even there in my mind. It was just, some money and I wanted to put to it. I had started seeing the Uber growth story in the US. So I was aware of somewhat of the startup ecosystem, but I just said, let me take this bet on the founders and on myself, I guess. And that was the first story. And interestingly enough, whatever business they did, they won an X prize in that, and that was all great. But that business didn't go that way. And then they pivoted to consumer electronics, and now they are one of India's best consumer electronics brand. So, it was like Rupa said, it's funded, or it's more on the company than, on the founders than the idea. And it's still one of my, I guess, best investments. Yeah.
Something very interesting both of you mentioned is the team. So I would just ask the both of you to emphasize on how important it is to look at the team when you're investing into the startup, and how would you evaluate a team? How would you tell, okay, these bunch of folks are the right kind of folks building or solving this kind of problem? So what is a good team according to the both of you?
Go ahead.
Yeah. Okay. We just do it like this, or you just call me out. Okay. So I think the team is, it's about the founding team, because very early on things can fail a lot, right? And we've seen that, and there are external variables such as the last 2 years, right? Nobody can account for variables beyond a point, but what you would have seen in any of the unicorns or any of the extremely successful startups is the resilience of the founder. So for me personally, two things, right? Core competence and complementary skills in the team, because usually a sole founder is a tough story. It's a lonely road in entrepreneurship, and typically a well-rounded team helps. And then the dynamics between the team. So the skill of the team, the dynamics of the team. And I would say thirdly, the personality. Just, this is a very personal thing for me, and it's not, doesn't have to apply to every angel investor, is that I look for certain traits such as being a founder, being grounded and resilient. The life story, what they've done before they became a founder, has a lot to do with who they are, and how they will handle challenges and how they will handle anything that comes their way, right? And that's about all you can do, because angel investors typically come in at a point when the business is not in the growth stage, right? You come in when it's an idea stage or it's just being tested out. So there are a lot of things which can move around. What will not move around is what is the personality and sort of the dedication of the founder. And I think that's sort of where I come from.
Right. Jayaroopa, would you want to add to that?
Yeah, Neiharika covered, the most important parts of it, resilience especially, right? That is the most important part. How you assess it is, different people have their own ways of, tweaking questions, whatever, or hearing about their life story, their achievements and so on. But resilience is what it boils down to. There are a few other things that I would add, which is, what's driving the entrepreneur, right? That also would connect to resilience, right? Is there a strong reason we are doing it? And then asking a question like, why you? Why are you best positioned to address this and not somebody else? Will give you some sense of, what they think their strengths are, what's driving them. A whole lot of things will get covered by asking that question as to why you versus somebody else, right? Because ideas can come to anybody. How you go about it and the drive with which you address it is what is key. Now, the other thing that I look for is the vision of the founder, right? So is it a narrow focus? Are they able to think at the bigger picture? Understand the scope of their problem and understand the challenges associated with it. It can't be a naive decision. You should understand that there are going to be a lot of challenges, and you will be addressing. One of the big red flags that I see is, when you say there are no challenges, money is the only challenge, right? That's the biggest red flag you can find, because no business is without challenges. The reason why something hasn't been done is there are challenges around it. Another factor is, are they able to articulate their idea well, right? So sometimes you may not have all the skills. You're a founder, you may not have all the skills. Yes, if you have built a great team, that's awesome, right? But are you in a position to articulate and get necessary resources, right? So you have to be able to either sell your idea to your team, to your investor. That becomes important. Essentially, the ability to gather resources to drive your idea. So, yeah. So it may not be presentation skills per se, it's just that persuasion and conviction that comes with it.
I get what you're saying. If someone's able to articulate something well, it also shows how deeply are they understanding the problem, right?
Absolutely.
Right. And also complementary skill sets and the expertise that you can bring in that particular domain that will help you build the solution or solve the problem is important and critical. I think these are really well thought points that you all have shared. So my question next is something around network and network building, since Niharika, that you also mentioned how you reached out to your first founder through LinkedIn. So how important do you think is building your network within the ecosystem that could help you connect to the right kind of founders, or knowing folks from the ecosystem at large itself? So as an angel investor, how important do you think it is to build your own community or be part of certain communities that could help you connect to the right kind of folks? So what are your thoughts on community building at investment?
I think that has to be Rupa with her women, and she's done this and done this very well. So over to you, Rupa.
Sure. Look, so there are, while let me address a question, but before that, let me share a little more, right? So, we addressed team in the previous question. And while team is very, very important, there are different aspects to angel, or where you enter as an angel investor also could vary, right? So when you assess a venture, you're looking at multiple aspects. Team is a very important part of it. It's a go, no go kind of decision. Next comes business idea, traction, valuation, right? Those are all areas. So it's not just about, do I have access to founders? It's also to ensure that you have necessary information about the overall business and are in a position to assess the overall business apart from the team, right? Now, this is where networks come into play, right? As an angel investor, I may not have the ability to assess all of it, right? Or there is a certain trend to, you have to learn it over time, and therefore you rely on others' experience in order to get there. And this is not just with angel investing. The reason Neiharika pointed out in my direction is because it's the same. Even if you're doing a job, like for instance, the Women in Investing Network that I've built is essentially like to enable, people to learn from each other, right? There is always information that's flown in an official manner, and then there's an unofficial information, which is where, the meat is,
Yes.
the bulk of the meat is, and that's the information that you need to know, right? It's the same with angel investing as well. And what it allows you to, what networks allow you is access to deals, access to discuss those deals, understand, from some sector experts, right? Whether it's healthcare, there'll be some sectors which resonate deeply with you and some that don't. So, especially the ones which you resonate, also it might resonate, but you might have an intuitive feel for it, but you still want to go through a process. And that's where networks help. So one is, the network, I mean, if it's an angel network, for instance, they might be able to help you in that education process. If it is through your, a friend's network or whatever, again, there's a lot of discussion that goes on. Even when you're attending a pitch and you're watching it, you will learn from each other because people are asking those questions, right? And it's an open forum. So, so whether you're able to invest, so don't, when you're participating in a network, don't think about it as, oh, I like this deal. Am I going to invest it now? Okay, then I'll be involved. If not, no. That's not how it has to be. So the first few investments, you have to give it your time and energy in order to learn about it. Then you make an educated decision as to why you're not making that investment or why you are making that investment. But going through that process is very educating. You're learning from peers.
Right. Niharika, would you want to add to that as well?
No, I think Rupa has sort of addressed it completely very well. The only one thing I would say is that a network's value, whether it's angel investments or anything else, is not very transactional, right? Like you can't think, hey, today I'm going to reach out because today I need to build a network because tomorrow I need to start angel investing. Honestly, whether it's this or anything else, it doesn't work in an extremely transactional manner, and that instant gratification isn't there. So work on it. I mean, it's not even work. Honestly, networking is, I think, become a heavy word now. It's actually getting to know people who like things such as yourselves, right? I mean, what session we're doing right now, we're just getting to know each other. So I think just taking that out and understanding that in a making investments or making financial investment conversations as okay as talking about movies. I mean, that's literally what I think. Like, it's not, let's not put that heavy band to it. And then you'll realize, right, that like just as Rupa said, one is the, of course, academic or sort of a professional aspect of it, the details of evaluating a deal. But a lot of times you'll realize, you know what, Sanjana invests the way I do, or she thinks the way I do.
True.
Very soon I'll start asking you, what are you looking at? Because I'm very comfortable in the way you think. And I think it resonates with what I want to do from my investment portfolio. And so then it just becomes like, choosing a nice place to go to have dinner. So I'm just saying that I think it just needs to be super normalized. And I think that's what it is. So yes, if it's something you're considering, then definitely learn about it, talk about it, and meet people who are interested in it. And that's what the network is. Yeah.
Right, very well put. Now that you have mentioned or emphasized on how important it is on network building. So usually when few folks enter into the ecosystem, like you just said, it's made as a very heavy word, right? Network, and you have so many networking dinners, meetup, mixers happening. And not everyone's an extrovert who can go out there and grab it at the first time. Usually I'm sure I'm not, I don't know, like I've been there. Like you don't want to be that initial one making that conversation. You don't know how to break that ice. So would you have any tips or hints or whatever you could share for somebody who is new into this ecosystem or angel investment at large? Jayaroopa, since you have built something from ground up, like women in investing is something that you have founded from ground up. So how did you go about building this entire thing? So what was it like for you?
So the reason we built it was to address the same problem, right? Like, we'd go into any of these events and we'd pretty much be, my co-founder and I would pretty much be the only women in that room, right? So, and it's okay. It's just that for social or cultural norms, there is no meanness involved. It's just that, they're not used to talking to you. And therefore, they have a certain style of talking, whatever. So you feel left out. How do you go and break into it? Right? I mean, some of us still manage to do it, but we realize that it may not be possible for everyone. So a very good way, and this is a common problem in not just angel investing, in all external facing roles, right? But you're in a workplace, it's easy. You're meeting the same people every day. In a setting which is outside of work is where it becomes much more challenging. I draw parallels with the VC industry because VC industry is entirely external facing. Sales is, a lot of external facing, so on. iBanker, for instance, and so on. So what the best way, in my view, is to reach out on a one-on-one basis. You don't have to be extroverted. You don't have to go and, be noticed, right? Your deeper connections are often made one-on-one.
Yes.
So you might make an introduction, exchange a quick card, follow up with a LinkedIn connection, set up, a 15-minute coffee chat. What's important is you make that you identify the people who you think could be relevant, not just the most, I've seen people make this mistake very often, right? Not just reach out to the most popular people in the room, or they typically don't have the time for it, or the people whom you think are the most extroverted. In fact, go and reach out to the people who've done their work, right? Who have that 15 minutes for you. You don't have to necessarily learn from the greatest expert in the room. There are other people also who've done a lot who are probably introverted. So reach out to them on a one-on-one basis. Schedule 15-minute, half an hour sessions with them. Always ensure you add value to a conversation, right? It may not necessarily be the same topic, right? It may not be angel investing, but just be curious to learn a little more about that person and see how you can add value. The other person in a conversation should not come up saying, hey, what did I get out of it, right? It should be at least an engaging, interesting discussion. It can't be a one-way discussion. But most of us, pretty much all of us are capable of doing it. We just have to relax about it.
Push ourselves a little, relax.
No,
Yeah.
actually relax about it and have fun having that conversation, right?
So true.
Be excited about the topic.
Right. But I like what you said, add value to the conversation. I think it also comes with the fact that going and interacting with the relevant and the right set of folks. When you speak to the right kind of folks, the kind of value you can bring to that conversation by default happens. Before we move to the next question, I already see questions are coming up on the chat. So I will quickly end. I'm just setting the context for you folks to ask more and more questions. So the last 15 or 20 minutes of this session will be open to questions. I will just probably ask a few more questions before we move to that. Just moving into a little technical detail. So when someone has just started off, they might not understand what terms to look at or how to, go about understanding the entire thing. So what advice do you have on how can you evaluate certain terms of angel investment? Because not everybody comes with a legal background or a startup background. So what do you have to say on this?
Okay, I'll take it. So the first bunch of things, I mean, it could look very, very complex, and often they run into sometimes, close to 100 pages. So it could get a little worrying. The key things that you need to understand is, what is the instrument that you're investing in, right? Is it equity? Is it convertible shares? Is it a safe note? There are a whole lot of them. It's, we may not be able to cover that in this discussion, but it's useful to also go and take a look at it to understand what the different options and they're available. They're publicly available in terms of a Google search should help you get to them to understand what they are. Understand what the valuation is. When people say, I'm looking for X amount for 15% or whatever, understand, and people talk about pre-money valuation, post-money valuation, they all could get confused. Look for post-money valuation number. That will give you an indication if let's say 5 million is your post-money valuation, just an example I'm just throwing up, and you are investing 50,000, then the amount of shares that you get is essentially 50,000 by 5 million. So that's the math that is involved. When you say pre-money, it could get a little more confusing. There are other factors that come into what is the ESOP dilution, how much are you able to raise, and so on. So just look for post-money valuation, which will just make it easier, right? Liquidation preference is another one that's important. Typically, the standard liquidation preference that is used is 1x, which means that when there is an exit, you're able to take off that money off, and then the founders get paid. Sometimes, there could be more favorable deals of even 1.2x, 2x, whatever. So you just need to understand liquidation preference. Ensure that others in the round that you have investing in are not getting a better deal than you when it comes to liquidation preference or whatever in that same round, right? Ensure that the terms are the same for your investors in that round. Chances are, as an angel investor versus an institutional investor, there would be a lot of differences. That would be pertain to board rights, minority rights, veto rights, and so on, which you have to forego because as an angel, there are certain rights. You don't get those rights compared to what an institutional investor would get. But otherwise, ensure that the terms of your investment, whether it's liquidation preference, right of preemptive rights, tag along, drag along. These are key things to look for to ensure that you are on a good footing. And essentially, at the time of exit, you should be in the same position as somebody else.
Right. And Sanjana, I'll just add a little bit to that. I think just gives an idea about, while honestly, I feel choosing or deciding upon an organization and a founder, that's not the tougher part. It's the legal part of it, which is the attention to detail, right, for an angel investor. So my recommendation would be that if you are a first-time angel investor and you've never been in this, please do have legal advice.
Right.
Please don't try to figure it out by yourself. That's just my, like, I think 2 cents. And there are networks such as, the one that Rupa and I are a part of. That's what we do, right? We not only do we help you evaluate a deal, but also look into the legal aspects of it, because yes, it does take a while to get used to everything, right? And these are very large documents. So anytime it is, at the end of the day, it is a legal transaction. So a legal transaction on which you are asking for specific rights, and there are certain, like she said, liquidation is another aspect of it. So to make sure that your interest is kept in mind, unless it's a friends and family round, which is very early, done by someone and it's very clean and it's very early, it's a different thing. Otherwise, please do go to a professional. It does help, and that's where the value add comes in, whether it's a legal professional or it's a CA or an iBanker or even an angel network. That's where we are able to help make sure that your rights are protected. And it's very important, because unfortunately what does happen is, because this asset class is not standardized and there is no standard valuation, and every deal is new, everybody wants a different thing. It's not like a mutual fund wherein you put in money, so 50,000 gaya to 50,000 hi milega, right?
Exactly.
It's a different deal. So please make sure someone has understood that, and keeping your best interest in mind, a professional can do that for you. And of course, as you get into this, you will keep getting smarter, and I think it's a learning process. Every time there are instruments that are coming up, I think SAFE did not exist till a few years back. Y Combinator introduced SAFE, and that changed the way the game was played. And then now more and more companies are going for startups are going for CCPS, versus what used to just be an equity or priced round earlier. So things are changing and there are trends. But yeah, definitely keep that in mind before you go investing.
Yeah, just adding to that, we take a safe note approach at HIC as well. And yes, legal or professional advice, especially if you're first timer, can definitely help you.
Yeah.
And that's probably important. So Niharika, the next question or it's probably for the both of you. So what are some of the other ways that you can source startups? I understand network is one important thing, and we have covered it. So also angel investment platforms could be one. So what are some of the other things, other ways that you can, go and source the right kind of startups?
I think startup sourcing is this, the world's your oyster. Yeah. Like nowadays, you never know. You could be at an event, or not even networking, right? You could be at a family event and you get to know someone starting something. So I think I'll also take another step back. I think startup is a different word. We've all been hearing, people doing businesses, and back in the day also family people used to put money in, right? Now it's just become more streamlined. So it's now called a startup. Pehle it was called a business. So I just feel like these are just nomenclature. But going back to it, I would say LinkedIn's a great platform. I mean, if you like a company or you like something someone's doing, or even news, right? You reach out to them. I mean, what is it that can go wrong? If you read someone's, started, or the other part is if you're part of a, your own alumni, whatever is your institute that you went to, all colleges and institutes now have a very strong incubation center,
right.
innovation center. You keep getting startups, and then there's something to be said about giving back to your alma mater. So if you feel like, I know the people out of this place, I understand what they're doing, and there's some value I can add. And I always tell angel investors that, of course, just as Rupa said, you have the option of being a passive angel investor, but typically those who are in it are not passive. They do it for the love of, also adding value, and whatever you've learned in the world or your network, you want to add that value. So that even gets stronger when it's your own institute. So that's another. And yeah, I don't know, like I think keep your eyes and ears open. If this is something, like if you're passionate about food and health tech or whatever, that's where you want to start off with. You'll start seeing what's happening. You'll see the trends. You'll see social media keeps us very, connected. I have done random, I mean, not that all the ones that I wanted to invest in, I invested in. I've reached out to a couple of people and I was like, I'm interested in coming on as an angel. And maybe they were not at the time, interested in taking an angel on, but it was a product that I used and I loved. And I said, there's value that I can add there. And then other times, if you are active on LinkedIn and you do put out that you're an active angel investor, or this is a sector of your choice, and you start speaking about it, right? And just as Rupa said, networking, extrovert is fine. That's working a room. And sometimes that's something I am also always working on. But it's, for me, like what I found it easier is to speak up on text or on, LinkedIn about things that move me, right? And then you will start seeing folks reach out to you connected to that. And then, it's the organic exponential effect that just goes from then. You just never know what will sort of come out. So that's, I think, those are sort of my few ways of looking at it.
Yeah, when you probably obsess over something, you'll start seeing it everywhere.
Probably, that's true.
Right. So Jayaroopa, would you want to add to that?
I think Neiharika has fully covered sources. I mean, anything that you can add beyond this would be like a much more expensive one, which is not probably suitable for, people who are angel investors.
Right. Okay, I'll start taking questions because I'm getting pings after pings on the chat. The first question, based on Jayaroopa and Neiharika's experience, what is the success rate of angel investment? For instance, out of 10 investments, if you have invested, how many of them have succeeded and given returns? Like, what is the success rate that you see?
I'll let Neiharika answer this one as a long-term angel investor.
So that's a good question, and I think the counter question or clarification I would ask is, what are the parameters of success? So has the startup survived? So is that a survival rate? Because just a call out to everyone, there is a tendency, of very early on, and otherwise as well, we've seen startups not working out or failing completely or shutting down, right? So that's one parameter. The other, typically, which I think my assumption is what I'm being asked, is if I have gotten exits, right? So that's when you make the money. So your gain is unrealized, like in any other market, until you cash out or you get an exit out. And that typically happens with an angel as well. When someone else comes in, I can feel very happy. Yes, my valuation is now XYZ, but it's not money in my hand till I have exited. And that is few and far in between. Just again, so typically I just want to tell the group here, with angel investments, I would say be patient. At least minimum 2 to 3 years is the bare minimum. Do not think of it as a quick turnaround. It's not one of those extremely liquid asset classes. So I would say I have been successful because none of my angel investments thus far, cross my fingers, have failed. So they're all still surviving and running well. I have gotten an exit on one only. I have about 8 to 9, and I am increasing my portfolio. But yeah, I would say they're fairly successful because they have gone on to raise. They're either profitable businesses now or they're raising more. So it's been good. And like I said, it's each investor to their own. What are they looking for? I have not had a 0 to 100x return, if anyone's thinking about that, because I know that's another expectation folks have from angel investments. My own expectation from my investments is anything over 5x is good. That's just my own benchmark. So yeah.
Got it. So we have another question. Apart from term sheet and SHA, what other key legal work an angel investor should care about? Especially from individual financial management perspective. Okay, what are some of the other legal aspects that you all want to look into if it's not for term sheets and SHAs? Is there anything else involved? The whole investment as a key. Do you want me to repeat the question?
So they essentially have covered it. I mean,
yeah.
As far as your relationship with the company is concerned, this is what it would be: term sheet and SSA. If there is an enabler involved, then there might be some documentation with that enabler, right? But apart from that, as far as the company, for instance, whether you're using the syndicate or an angel network or whatever, then you'll have a different set of arrangements there. Apart from that, this is all that is to do with the company.
Got it. The next question's on the team. So we have already covered that, but the question is around soft skills, like complementary skills, the kind of expertise a team member brings. All of these things is the technical aspects of evaluating a team. How would you judge by the soft skills or the personality of a founder? And I think this is something very personal to everyone. If you all would want to add to that, yeah.
See, it's about when you say soft skills, I kind of touched upon it
right
earlier, which is essentially your, especially for you keep in mind what the business is about and see if they have the relevant skills for it.
Yeah.
Right. And what is it? Again, complement skills. Are they covering the key skills for that business idea?
Yeah.
Right. Is is it purely like, I'll bring the idea, now I have to recruit everyone.
Yeah.
It could work in certain cases. As far as drive, passion, and all of it is concerned, like Neiharika was mentioning, it is what you've done before, right? Like, do you have a strong story of, what obstacles you faced, what kept you resilient, what kept you going, whether you played a sport, whether you followed a hobby, whether you did well in school, whether it could be any of those aspects, could be any part, or maybe you dealt with a health issue, whatever it is, what kept you going, right? That grit, grit is what you're trying to assess most of the time. So I think that's the greatest quality one is looking for. Now, the other skills you get to know, right? It's about your education or your previous past experience. Those are the skills that there's a certain touch and feel to it.
Yeah.
So grit is what you assess by actually getting to know them a little more deeper, or some reference checking, which is what a lot of networks and the like would do.
Yeah, so it's good to know the person you're investing. A lot of VCs say this very often, like you're investing in the person more than the business itself. So do your due diligence about the founder as well, and not just about the business. Try and understand how devoted are they towards solving this problem. I think that will be one take from whatever you just summarized as well. So the next question is something that's very largely spoken about in the ecosystem right now, funding winter. So how is current market of funding, or is there winter in angel and VC funding? Yeah. So what are your thoughts on the funding winter that's coming up?
Very interesting question. This is, and I think I'll be honest, I think amongst us as well, I'm sure everyone has a different view, right? How they define the funding winter and what it is. In my opinion, there's never really been a funding winter when it comes to pre-seed seed, like the early stages. And typically that's where an angel investor comes in, right? I mean, you do have angels, large angels coming in at Series A, but that's few and far in between. So there's not really been a funding winter. What I will say is that I think what the ecosystem feels that the valuations had reached a very inflated place. And this is the sort of check that has come into place to normalize them a little bit. And hence a lot of the VCs that do invest in Series A onwards, right? So Series A is your growth. Pre-seed seed is when you've got a product going, but you're trying to figure it out. And Series A is when I figured my business out pretty much. And now I'm just looking to fuel the growth. So that's when a lot of the VCs come in, institutional funding, right? So those guys held on to the money because they felt that, the valuations were very high. And so we did see, things getting crunched there, which also meant suddenly the pumping of money that was happening in certain sectors reduced, right? And so things which were inflated, deflated. And I think that's sort of what has made people feel that there is a winter. Now, if you ask me, in pre-seed seed, not really. But what we have seen is, I feel the quality of the founders has improved. There was a time when anyone with a deck and with certain credentials was able to raise, right? So there was just a wave, or the sentiment was such. Now the sentiment has become a little more, I won't say from an optimist to a realist. That's the only difference. I won't say it's a pessimistic environment by any means, right? The amount of new funds that are coming in globally as well as in India stand testament to that, as well as the number of fundings and deals. But yeah, I think it's just that. So I would say, at least for an angel network, I won't say there's been much of a funding winter. But I do feel this conversation of funding winter has subconsciously played on some angels' mind, right? So the folks have started saying, is there a winter? So this question is consistently asked. But I think whatever that was might have been in the last 2 years, due to the COVID and other things. But definitely now with things opening up, I don't think there is one.
Yeah, please tell me.
I think I in fact think it's a good time to invest.
Yeah.
Because now you have time to assess a deal. You have, like, it's not the bad founders who are getting funded.
Yes.
And there's that time to assess it. I think there is when you talk about a funding winter, what was happening over the past 2 years is, somebody's raised a pre-seed. Within the next 6 months, they've gotten, the next round, and so on. Like pretty much what should have happened over 5-6 years or more was getting compressed into 2 years. So which means I'm also asking founders to ensure that their burn rate is curtailed, to ensure that, they are raising funds for before this entire, it's not actually a funding winter. It's actually the fact that that crazy excitement is dying down. But before that, typically any founder was advised to take money for at least 12 to 18 months.
Yeah.
Right, that was the runway, and lately it had been shrunk to even 6 months.
Yeah.
So what you as an angel investor needs to understand is that there's going to be a certain time frame required between one investing round and another investing round, which actually allows that founder to do a little more than just fundraise and actually build the business.
Yeah.
It's there are advantages to it. Valuations are not going to be ridiculous. So if you think I will invest this and in no time I'm going to get in 2 years, that's not going to be. You'll have to be a little more patient about it. This is it is a high risk, high investment, high return kind of category. You have to understand that liquidity is not going to be high, but good investments will find their money, will find growth and get there.
Yeah, and this is something I heard from my colleague also recently. Capital is still going to be available in the market. People are just going to be very, very cautious about where they're going to invest that capital. Right. So the next question is, as an angel, how do you evaluate sector agnostic tech startups at idea stage? Because I think that's a very good question, considering not everyone comes with all kind of expertise, and it might be difficult for you to assess all different sectors of startups. So how do you look at sector agnostic startups? What is your view on that?
I fundamentally think, some sectors have to resonate with you and you have to build abilities on that front, right? You might want to attend, till the time you identify what your core sectors are, what your areas of interest are, you might attend a broad set of pitches, right? And take a sector agnostic approach. But you will realize very quickly that, healthcare resonates with me, consumer resonates with me, or climate sustainability resonates with me, fintech resonates with me. There will be certain areas based on your work experience and so on. You might, it won't be just, some people might just choose to go deep and, dig deeper into one sector, which is also fine. So to some, it might be more than that. It might be 2, 3. Some of us, decide, okay, it's these 2, 3 sectors which I will keep track and keep assessing. But something about a founder or something might really impress you, and you might go out of these 2, 3 sectors and invest in anything. It's a fairly loose approach in that sense, but you build your core competence in a couple of them over time.
Yeah, I agree. I think, we all have individual preferences, right? So just like Rupa said, whether it's your work experience till now, whether, a lot of time, the reason we've seen consumer resonates with a lot of people who come in as first-time angel investors, and this is just from our personal experience at the network, is because as a consumer, you felt the need. You knew something was missing, right? And so now you can say, yes, of course, this is a product I will use, or I know someone in my home who will use it, versus something like a SaaS. If you've not come from that background, then that becomes slightly different to understand. I'm not saying for everyone, but for certain people, right? So between your own experience, between you as a consumer or an end user to a lot of these things, including health, or just your own passion and hobbies, you will figure out there's something that resonates. And of course, we all have that interest wherein we're able to, figure out the missing pieces, because usually, unless a category creation is happening, and that does still happen, but it's few and far in between, right? You will be able to figure out, if you are looking or reading in the news about certain sectors, that what's the missing piece in the puzzle, right? And that's where usually new ideas are coming in. And that's where, as an angel in the pre-seed seed round, you covered. So I would just say, don't think, think, but do not overthink, because angel investment till a certain point is, like I said, since it's a founder-led decision, it is some gut, right? It is not all heavy modeling, which usually happens in Series A onwards, and that's what VC firms do, right? It's a very projected out cash flow projections along with other variables. At this point, you are betting on the founder, you're betting on something that feels right, and of course, the business needs to make sense, right? So do look into that, and and I think just take it from there.
Picking up right there, you said read what's on the news and etc., right? So what do you think are the trends in 2023 in investment? What do you think are some of the sectors that an investor could focus on?
See, I'll just say this. I mean, I can definitely speak to this, but before that, I'll say there are always flavors of the season. And as an investor, this is again, IMHO, all in my humble opinion, that be very wary of choosing what's just trending right now if you don't believe in it. There was a time Web3 was trending. I'm not saying I'm myself a Web3 investor, right? But I have been investing irrespective of what people have been saying. So you can't just go on what's the flavor of the season. You will see certain valuation cycles happen. But by the time you're reading it in news, the cycle's been written. So I'm just going to say this out loud, right? So when the time you say, अच्छा इतना इसमें पैसा हो गया तो लग चुका है, अब तो वो सीरीज A B में लग रहा है, तो pre-seed में कम होगा. So, you have to catch, like Rupa has said, catch it earlier. So having said that, if you still have to say, I think climate tech is massive. I would say that's again something not for just this year. I see that increasing year on year, slowly but surely. I personally think health tech can never go out. I just personally feel health is one of those things, and still, at least in our country, in spite of everything we've done, there's a lot of room for disruption still. That's another. Otherwise, we've seen a lot around AI, right? So within AI also, there are semi buckets. There is unstructured data, there is predictive, and then there is generative AI, right? Which is what we've been seeing a lot in the news. So these are the three different sectors. And then, of course, we've seen defense and deep tech from last year also catch up, right? So we've seen more and more defense deals happening, aerospace and drone. So those are the ones I would say. Rupa, you'd add more.
No, I think I've covered space tech is, I think, going to be a big one. FinTech, just the fact that, there's so much, people keep thinking it's over, but there are still a lot of subsegments which haven't been addressed. Right now, ways to make money there, I think, people tend to lean in one or two directions, but there's so much in the B2B space, for instance, which hasn't been addressed, which needs to be addressed. I think there are lots of areas that will get addressed. But we also, I mean, because you mentioned generative AI as well, right? I think a lot of businesses will have to start looking at ChatGPT and its impact on, that'll be a completely different lens that you'll start putting in saying, is it obsolescence? What do you do? Those are also things that you'll have to, or how will someone tap this in order to grow? There are different angles that could come up.
Yeah.
I think that was a very good example. I think ChatGPT is just been everywhere in the recent past. So the next question is, what is acceptable valuation for angel to invest?
I wish I knew.
That's the golden question. It's what I think it's. I won't say it's, that's such a tough question to answer. Honestly, there is no right way of saying what is acceptable. What is acceptable to you? It has to be, see, a valuation, just to, and I'm sure everybody's still on the same page, but just to clarify, valuation is your belief in the value of the business, usually based on the future. It is very little to do mostly with the present. Okay, there is always a multiple put on everything, because if I had to only look at your month's revenue, then it's just this month's, right? So people look at annualized revenues, and then multiples are put on that basis, standard projections and stability taken into account. So I would say what you think is comfortable for yourself. And I tell people, see, there are two aspects to it. One is how active as an angel you want to be. So do you have direct cap table access? Cap table access is, do you have a name on the equity table? A lot of times, for the large, when you come in later, if you're not putting in enough money, people don't give you cap table access. And then they say, come through a group of you coming together instead of each person to their own. So to me, personally, cap table access is important. That's one. The second part is, because then that gives me liquidation rights as and when I want to exit versus being dependent usually on a group, right? It's a separate part. But the second part of it is, I think the valuation has to be fair. I also feel it's a very gray area, because this is, again, just me. I feel if it's a very founder driven thing, I feel, is this guy or girl able to convince me, and can they convince the next person that the valuation is going to be higher? Because my money will come in when the next person values this company higher, right? So I think it's that part. And I would always say, don't look at, a lot of people say, मुझे अगर इतने में मिलेगा तो इतने में, like fine, negotiate, but understand when there is a really good business, and if you think it's really good, enter at a decent valuation if you think it can go high. Don't be stuck at a number. the number is no number. I don't know, whatever that number is, someone can say it's 20 crore, 5 crore, 30 crore, but what are you even getting for that, right? Depends on what you're putting in. And secondly, can you think that 30 can go to 300? Or will someone give you 10% of a 3 crore company, which will never go beyond 10 crore? So, like, think of it from that perspective versus just the sheer number. I think that number can be misleading at times.
That's right. In early stage, rightly, like you said, valuations is a very tricky game. Like it's actually a very simple math between your funding amount divided by your equity stake. That's how most people do. They don't even go towards discounted cash flow and all of these things. It'll probably kick in only after Series A and things. So I think it's mostly about the team, like you all rightly stated, the kind of problem that they're solving and the market opportunity and the scale that it can create. I'll probably take two more questions before we wind up. Coming back to networking, one quick question on that. What do you think are some of the networks or communities that an angel investor can be a part of that could help them in this ecosystem when they are at least initially starting off? Do you all have any communities that they could, like go check into or be a part of that could help them?
Rupa, you want to take that?
Yeah, I think Neiharika had addressed that in other ways as well earlier, which is, communities, there are a whole lot of angel networks, right? So that's one way that you access it. The other is there are investing platforms that have come up or have existed for some time. So, whether it's syndicates or that's also another other way to access investments. And LinkedIn again. It is find interest groups in that, right? Investment groups, interest groups, which provide that. So those are primarily the ones that I would think of.
Right. Got it. So one last question. After you've done an investment, what kind of information and visibility from the business do you expect? Yeah. So, yeah. And also maybe if you can address, like, sometimes these startups won't really appreciate if the investors are, like behind their back about everything. So what is that fine line that you can maintain where you can get the information that is necessary for you, but also don't poke your nose too much into it?
I think that's a great question. First, good call out on that question, because I think that's not spoken about enough. I will just say that, taking the second part of your question first, and then of course Rupa can sort of build onto it, is that understanding in the initial part only, when you have spoken to the founder and you've evaluated, you would have figured out, are they communicative, are they transparent, is that something that sort of works with you? And I would always tell people, it's important as an angel investor to become, I won't say friends, but on very comfortable terms, right? That person should not, it's not very complicated. This is not a early stage may, you should be able to reach out to them quickly over a WhatsApp even, or a call, right? So without poking in, I mean, at least me, I will say for my investments, I always ask them, what can I do for you? How can I help you? Right? So if you keep it like very constructive, then you're not poking. You're not saying, tell me what's going on, I need to know. Then, of course, someone can push back. But if you say, hey, I read about something else, and, maybe competition or maybe an opportunity, and here's what I was thinking. Do you think this is something you would like me to help with? And you'll see that founders actually genuinely love that. And as an angel investor also, it'll help build your brand, because founders also talk amongst themselves. If we think investors are talking amongst ourselves, then founders are too, right? So they will say, you know what, he or she is a good angel investor because they go over and out of their way to make it comfortable and help me out. And those are the kind of people you need. Secondly, I would say, yes, do ask for information. Tell them clearly there are quarterly updates should at least happen. You need to know on a quarterly basis, hey, what's the business doing? Is there a big hurdle? Maybe that's something you can solve. Is there a big deal? Is there a diversification that's happening? Whatever, right? So quarterly updates is not nosy at all. And I think it's a bare minimum hygiene that should happen. Yeah.
That's right. I think quarterly updates is something that definitely they should expect. And like you just rightly stated, strategic investment is what most founders look for. And it's not just the capital that they're looking for. At least in today's ecosystem, they also see what kind of value can this investor bring to you, because money is very largely available in the ecosystem today. Thank you so much. We are beyond time, so I wouldn't move, but I also see a few questions coming in. So please feel free to reach out to Neiharika and Jayaroopa on their LinkedIn networks. I'm sure they'll be more than happy to answer your questions. With that, I will wind up today's session. But before we go, for those of you who have joined here for the first time, interested in angel investment and want to take this up, HIC very largely supports. And the reason we are doing these sessions is to educate and enable more and more individuals towards angel investment. My colleague Rupali will probably just share the link here. If you're interested and want to reach out to us, please feel free to fill up that link. Thank you so much. Thank you for your time. Thank you for joining Jayaroopa all the way from Singapore. Thank you, Neiharika, taking out the personal time and joining with us today here. I hope you all enjoyed the conversation. I thoroughly did, and everybody else thoroughly did too, seeing the kind of questions and the number of questions that have been coming up on the chat. So thank you. We'll probably keep in touch beyond this as well. Would be happy to know more about the both of you. Thank you.
Truly
Thank
enjoyed
you.
the session. Thanks for it. And
Thank
thanks
you.
to the audience as well.
Thank you,
Thank you.
everyone. Have a good weekend. Bye.
Bye.